Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Hey, does it get dark down there in Florida, Shawn?
It's always bright here.
Always bright? Well, you don't need a Firestone flashlight from Axon then. If you send
at 1 a.m, I do.
Okay. They're in hurricane season. Not a bad idea to have a
During hurricane season, when we have power out for a whole month.
Yeah.
I need 4.
Well, hey, send an email to marketing@axontire.com with your details, and you'll get 1 for free for sure. So if you're looking for a Firestone flashlight, send an email to marketing@axontire.com, and they will send that to you with all your details. Make sure you tell them the Moving Iron Podcast sent you, and they'll put that in the mail to you. So Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on a couple times a week to talk about what's going on in the marketplace. And, I think it's the first podcast, Shawn, where you and I don't have anything to talk about. I don't know what we're going to do here for the next 20, 30 minutes. It's going to be a tough conversation.
I think we should talk about how fast swallows fly or something. It's something interesting.
Maybe toss that around a little bit.
Yeah.
No, there's plenty to talk about. And, we're going to keep talking about wheat here for a while because, they finished up the Kansas Wheat Tour last week. And from the time they got that done till the huge fall off of the outside markets, the Dow and everyone else out there, S&P 500 had huge losses last week. Throw that, fuel on the fire, and the commodity markets followed right with them. Kansas Wheat Tour came back a little bit more positive than people had thought. Basically, the tour said, the eastern half of the state had averaged something like 51 bushels an acre, which was an all-time high. And the western side of the state averaged, I can't remember what the average was for the western half of the state, but it was all-time low, and somewhere in the middle was about 39 bushels. So that's kind of where everything came together at. Yeah. As you take a look at that, Shawn, and you see what's going on with spring wheat in the north, where it's just so wet they can't plant anything. And you saw a rebound yesterday, a little bit of wheat. We was up like 22 or something like that for the day. But I guess as you took a look at all that, Shawn, what's your thoughts there?
Wheat's a little more complicated, obviously, because there's 3 different kinds, and they're grown in different regions, different areas. And so I think when I'm looking at winter wheat, what's on my mind is that, yes, the crop tour was definitely a bearish surprise, at least given that the East was as good as they claimed. And they took the market aback at a time, as you correctly pointed out, that the sky was falling with stocks and everyone was wanting to sell. We know Russia and Ukraine, for that matter, have had some fantastic finishing weather. And it does look like Russia is going to have the best crop they've ever had, starting with their harvest in June. And so they have record-ending stocks built up from last year's export taxes that built up inventories. So there is going to be enough winter wheat, Casey, for the summer, if Russia wants to sell. And I think Russia does want to sell. I think they need money, and I think that that's going to be one of the ways that they do it. So having said that, that and that typically as harvest approaches, you get harvest pressure. So hard for me to think that winter wheat is going to catch another major bid here heading into June. Pretty hard for me to think that. I think we're going to be under some pressure here into the middle part of June. Now, as we get to the latter part of June into July, you tend to get your post-harvest rally, and then you start looking at what's the winter wheat crop. I mean, how is the wheat crop looking in Europe? And on that front, I'm kind of worried about a drought that's kind of developing there that I think could escalate to a point where by late June, early July, I think there could be a lot of concern about the wheat crop in Europe. And if that occurs, then that might be a time that the winter wheat market, might catch a little more of a bid. The spring wheat situation is completely different. we had the worst crop in 100 years last year. We have no ending stocks. There is no substitutability for it. We were hoping to get off to a fast start in the Northern Plains. They've gotten a ton of moisture, so at least the worry over the drought being repeated is definitely they're going to have plenty of moisture. The problem is they're not getting it in the ground. I mean, mudding it in is not good for yields. And I can tell you a lot of the farmers in the Canadian prairies are rapidly running into the end dates in terms of when they really can't insure the crop anymore. And then they're going to quickly go out and plant a bunch of canola instead. So I really am worried that the North American acre spring wheat planted and harvested acres are going to be considerably lower than what the Canadian government and the US government said. And then whatever does get planted, even though there is ample moisture, a lot of it's going to get off to such a poor start. I just don't think this crop's going to deliver what it needs to deliver for that kind of crop. I also think the quality is going to be down, Casey. I mean, we're talking about, this is a crop that's supposed to be dealing with 14% plus protein. I think a lot of it's going to be downgraded to more of a 12% protein market that's going to fit in with the KC wheat protein profile. So if you're actually looking at how much spring wheat's going to deliver on what it's supposed to deliver on, we could have a very, very tight spring wheat market. And so I really think we're going to see a bifurcation begin here between what spring wheat does and what winter wheat does. It can trade dollars premium. Spring wheat can trade dollars with an S premium to winter wheat if there's reason to do it. I think there's reason to do it this year, and I would be looking for that differential to grow either from winter wheat prices falling and spring wheat not going up, or a combination of the two. But I really think that the correction in spring wheat late last week was just a contagion trade, but has no basis in reality. So,
okay. All right. So let's talk about crop progress, where we're at with that. We had an incredibly cold weekend here. I mean, it was in the extreme Western Corn Belt. We had some guys that were, 20 degrees overnight, 18 degrees overnight, 25 degrees overnight. So we had a hard freeze come through on a lot of emerged crop, whether it's sugar beets or corn. And so it'd be interesting to watch that, see how that plays out. I don't know how far east that went, but in this immediate area here, it got real cold. And even during the daytime, temps haven't been that overwhelmingly warm. We're talking, 55 to 58, 57 degrees, something like that. So right now, if you're looking at the crop progress report, corn's about 72% planted, 5-year average at 79. So that rebounded nicely from what we saw a couple weeks ago. 39% emerged, which is at 51%, which you would expect to be about 2 weeks behind there because we were 2 weeks behind getting stuff planted. Soybeans are about where they need to be, 50% planted, 55% is the average, 21% emerged, 26 the average. So they're pretty close to where they're at. Spring wheat, we talked about that already. Winter wheat, what we're talking about there is 63% of that's headed, 65% is average, 28% rated good to excellent, and 27% last week. So it's kind of hovering around the same thing. Cotton's right where it needs to be at 54%, and they're ahead of the average of 51. So taking a look at that, Shawn, in this cold start to planting corn, those kind of things, you talked about that at length here. And as I look at that and I saw what happened over the weekend, all I could think about was freaking Shawn Hackett's right again. Look what's going on here. So I guess as you look at this weather pattern that we're in right now, it's supposed to get warm here towards the end of the week of Memorial Day weekend, and then in the next week it's supposed to really, really warm up, and it sounds like it's going to stay that way for some while. Was this cold snap that I'm seeing right now, was that a widespread event, or was that just kind of an isolated thing out in my neck of the woods?
It was a little more isolated, Casey. I mean, everything counts in a year that you don't have any ending stocks, but I mean, it was more isolated. Look, the weather in the west, northwest, northern tier belt has just been very unfavorable. Whether it's been too cold, whether it's been too wet, it's been unfavorable. We talked about that. I think we talked about this last week. We're going to get to 95, 97% corn harvested here over the next week. We're going to have, but that last 3%, are we going to get it planted or not on corn? And I don't think we are. I don't think we're going to get that. North Dakota, if you like, I'm trying to remember exactly what the number was, but I think corn was only 10% planted. Or I mean, I don't know. I just don't see the northern plains getting the corn planted that they're supposed to get planted. And, I don't know, I have a working theory that the planting intentions report was too low on corn. I mean, I don't really think that was the actual intent. I don't think it was 89 million. I think the intent was more like 91 million. You never know for sure because it's just an estimate. But I don't, whatever the number was supposed to be, we're not going to get it planted in the northern plains to the extent that we need to. So I always felt that 89 million acre would go to 91. I now think it's going to stay at 89. Like that actually is going to be what we get planted because the northern plains is not going to get the corn planted. And so that really makes things to the point where you now need a perfect growing season. You need big yield to keep this genie in the bottle. Fortunately, I think we're going to have a pretty good year for weather. I think we'll have a little bit of a hot, dry weather scare late June into early July, brief, but overall, I do think actually we're going to have pretty good weather. But it's still, because of the acres being down, it still means we're not going to really get comfortable until South America can show it can finally produce a big grain crop, which they should be able to do as El Nino approaches, as we've been talking about. El Nino is wonderful for big production in South America, and it's wonderful for big production in the U.S. next summer. This is the transition season, and so it's going to be okay. It's going to help prevent a worst case scenario from unfolding, but it's still not going to provide comfortable ending stocks. I guess is where I'm coming to at the end.
Gotcha.
So.
Okay. All right. So you talk about some of, I want to talk about two different things here. One is energy right here. So this whole diesel thing they're talking right now, they're talking about having a shortage out on the East Coast. The West Coast is talking, rumblings about that in the Northwest. You hear some people talking about diesel shortages and what have you, and then everyone in the middle is just kind of stuck there. And starting to look at these prices as you move forward into spring harvest here, as we start talking about what's going on with wheat and those kind of things. How's the market going to react to that? I mean, if you're looking at $5 diesel fuel, not so much what it's costing the farmer to get it out of the field, but what it's going to cost it to go from point A to point B, from the elevator to the mill to the bakery to make your bread. I mean, how's the market going to react to all that?
Well, the more expensive you make the end user price based upon transportation costs, the lower the demand is going to be for the product. It's actually bearish for the commodity price because under normal circumstances, the commodity price goes up, it increases the price.
Right.
And the farmer benefits. But in this case, the price is going to be going up more from the energy price and the transportation cost going up, and not from the wheat price going up, for example. And so that is not a benefit to the farmer. He still has to spend that money to get it out of the field and his diesel fuel from when he goes to harvest it. And we're expecting a very wet fall harvest. So think about drying down corn, propane, natural gas prices, how expensive they're going to be to dry down that corn to the right level. It just takes money away from the farmer. It takes demand away from the product. I know most people, they look at energy price and say, well, that's bullish. It's actually, it increases the cost of production, which in the long run is bullish in terms of what the farmer needs to keep growing production. But in the short run, it disproportionately hurts end user demand at the expense of the farmer price. So it's not a good thing in the short run. And we're worried about this demand air pocket coming from consumers pulling back here this summer into the fall, and maybe having some kind of a hiccup for a lot of the prices of a lot of things, including things like food at the grocery store. We sent out our dairy report out today, and we did some analysis on restaurant performance. It's been declining for the last 3 months into March, and things have gotten worse. We look at grocery store and sales declining for the last 3 or 4 months. Everything is saying that things are slowing down and actually accelerating. And, that's just not good for prices that are already high. And so the diesel price just adds insult to injury to that whole process. And so even though the prices for many ag markets are not as good for the farmer as they would like it to be, I still would caution that if we have knockdowns in prices heading into the late summer and the fall, you could go from having profitable prices to unprofitable prices very, very quickly. Better to make a modest profit than to sell a modest loss. So just keep that in mind, that at the end of the day, when somebody goes to the store, they don't really care if the dairy guy is making money or not, or needs a certain price. And they're going to say, can I afford to buy this right now at the quantities that I have been used to? And the answer is no, they're going to buy less, regardless of whether you need that price or not. And that's the harsh reality of economics. So,
absolutely. All right. So let's talk about on that same curve there. The cold storage report came out last week, and it shows there was quite a bit of stuff in cold storage still in that cold storage report. So it kind of shows you where there, as you look at frozen beef and what that looks like, and the people coming in and buying beef off the shelf there, it was very bearish. So I guess talk about that a little bit and what you think's happened there.
Well, remember, we ran down these cold storage stocks during a pandemic like we've never seen before. So by default, we're supposed to get them back up. We want to get them back up, and that's part of getting the logistical system back into balance. Okay, so just understand, we're going from like crazy low levels back to normalcy. Whether that's bearish or not, it just means we're getting ourselves back to a better balance. Having said that, anyone that goes to the store and starts looking at mid-high cuts of beef, even beef lovers like myself, you go, shoo, getting a little high,
Yeah.
a little high. So, I mean, look, there's some issue there, right? And yet at the same time, the future number of animals that are going to be available to come to the marketplace later this year in 2023 are going to be some of the smallest we've ever seen. So that's bullish, right? So I think once again, it's sort of a timing issue. Timing short term, I think demand's going to hurt. It's going to impact the need for beef cattle at this point, at a time that we're still ending the herd liquidation cycle, and that keeps pressure on prices, at least in the short run. But intermediate term, those prices, I would imagine, Casey, the grocery store makes money on volume. They got to move. They want to move volume. So they'll move the price down at some point. If they start to get backed up and say, we're not moving the beef, then they'll move the price down. They'll start moving the beef. So, I don't think it's a permanent situation. I just think right now, that we've been dealing with sort of a shortage due to logistics and such forth and so on, that we're now starting to equilibrate. The next thing to happen is to see the grocery store meat prices start to come down and reinvigorate that demand later on in the year. So.
Yeah. Okay. So on the same side of that, you look at the hog market, you've seen some pretty strong gains here, especially this week. And as you're looking at the hog market price, you've talked about this, that moving into this time frame, we'd see a spike up in price. So talk about that a little bit.
We're killing off so many chickens right now because of this avian flu situation that the next best thing is pork. I mean, you don't go from chicken to beef. That's a price point that people just don't do. You go from chicken to pork or chicken to fish, depending on your cost structure. So there's a lot of demand for pork. And so when this market took a nosedive over the last 2 or 3 weeks, it reinvigorated demand, and we saw a rush in, to buy the cheaper pork and to slaughter some of these animals. Remember, we're not seeing any herd growth at all. We haven't seen any for the last couple of years. We remain at 5-year lows in the hog herd. So it's not like there's this massive amount of animals ready to come to market. Now we're adding some weights, and that that helps put a little extra supply in there. But until we can get this chicken market back on track and start growing the flock instead of reducing the flock, pork demand is going to be a buyer on every break, like we just saw. And so, what I would also like to emphasize, there's been a big change in the hog price in China, like a massive change in the last month. We've seen a huge spike in hog prices for the first time in like a year and a half. And that's the first sign that the herd liquidation cycle that they went through post their second round of African swine fever infestation is abating, meaning that oversupply has now been sopped up, it's been cleared up, and now the hog price is taking off again. And that will mean that there's going to be a shortage of pork developing later this year as we move into their typical holidays at the beginning of 23. And so one of the eyesores for the pork market has been this collapse in the exports to China. That's going to pick up big time later this year. In fact, I would argue that not only from this hog situation ameliorating, but in the reopening of China that we expect to see in the fall, demand for chicken, for beef, for pork, for dairy, going to have a really, really powerful spike in demand in the fall and into the fourth quarter, because they're going to try to pump up all their supplies heading into their holiday season, just as they unbolt everybody from their homes and lets them go out and do something. So there's a pretty exciting period coming up in livestock from the fall onward that I think is there. And we just need to get through a little more economic headwinds in the near term before we get there. But I think most of the damage to the downside in livestock is done, at least for cattle and hogs. Maybe I think the dairy market maybe actually has more downside for a little while. But overall, I'm pretty optimistic that from the fall onward, the livestock sector is going to have a pretty go of it, especially in 23. So.
All right, Shawn. Hey, well, good stuff as usual. Shawn, folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett, advisors.com. All kinds of information on there to let your listeners know what we do and how we do it to see if we could be of some value.
Right on. Make sure you check that out. Shawn's got a ton of information out there on his website. Just go check that out and see what he's got there. It's well worth your time to go do that. So, Shawn, appreciate you being on the podcast, man.
Thanks, Casey. I always appreciate the opportunity.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure to check me out on Facebook, Twitter, and Instagram. That's where you find the latest edition of the Moving Iron Podcast at Moving Iron LLC. If you want more information about the Moving Iron Podcast, go to MovingIronLLC.com, and you can find all the information that you can ever want or know about anything that's going on with Moving Iron Podcast. Also, the Moving Iron Summit coming up here in Nashville, Tennessee, September 6th, 7th, and 8th. If you're interested in attending that, go to the Moving Iron website up in the right-hand corner, click on the Moving Iron Summit tab, and all the information is right there. But if you need more information, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll make sure to get back to you. Check out my LinkedIn page. If you're a LinkedIn fan, check that out there. You can see the Moving Iron Podcast on there. And I'm looking for all the subscribers I can get to go to the YouTube channel and subscribe. If you want to see what Shawn looks like, it'll blow your mind, dude. Check it out. Shawn will be there. You can see what Shawn looks like there on the old podcast. So check that out.
I really don't want to. I don't want to ruin your subscription base, but
he's a supermodel. That's why I listen for him. All right, so check that out, and I think that's a good place to stop. So with that, I'm Casey Seymour, Shawn Hackett. Let's go do some iron, folks. Out.
Moving iron in the 21st century. Hardwood